Yeah, I continue to be bullish long term, and then even in this cycle, I don't think this cycle is over yet. I've liked the fact that we get these kind of mini cycles of slightly euphoric and then 7 months of sideways chop and another like spike up. And I expect that to continue at least for we'll see what happens the rest of this year. But I still think we'll see higher prices before we hit some sort of longer correction. I think basically Bitcoin's going through this period where, it started at zero. Now 16 years in, we're at a 2 trillion plus market cap. It's still 0.2% of global assets. Gold is 2%. Gold I think is already kind of reasserting itself to some extent. And I think Bitcoin at a tenth of the size is playing catch up. And so I think it's this increasingly recognized global alternative that's been tested technically. It's gotten to a scale of liquidity where institutions are obviously interested now. They're the main drivers this cycle. And so I think it's basically just this side thing you can play in, which makes a lot of sense in fiscal dominance.
In her opening analysis, Lyn Alden highlights one of the most significant changes in the macro environment of today, the increasing tension between government debt, interest rates, and liquidity. This time, the enormous debt overhang makes it much more difficult for markets to rely on central banks to intervene with aggressive easing whenever growth slowed. We're moving into a period where structural inflation, changing global capital flows, and fiscal deficits all combine in unanticipated ways rather than following a straightforward boom-bust pattern. According to Alden, this climate has the potential to change not only conventional markets but also the future behavior of assets like gold and Bitcoin. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
So they don't worry me, but I do pay attention to them as a market participant. So this cycle so far has been characterized by less extremes. And so, as I mentioned before, anytime Bitcoin needs upward volatility to grow. Anytime you get upward volatility, you're going to get people saying, well, if I leverage it, I get even more gains. And then emotions kick in and people can get euphoric. And now in the past, in Bitcoin and broader crypto, this would happen to extreme levels. And you get like a multi-year drawdown and washout. So far this cycle, and we could later have a blow off top, but so far this cycle, we've been having kind of more moderate levels of euphoria. So for example, when the ETFs were approved, and then the month or two that followed, we had kind of mild euphoria in the market, and then we ended up getting a 7-month consolidation in Bitcoin because of it. And then when the election happened, we were perceived as having a much more pro-Bitcoin, pro-crypto administration and policies in play. We got a really big bump in November, and that gave us kind of, again, another like 7-month-ish correction. I think that's pretty healthy when you kind of have this step up and then big choppy sideways of kind of letting off steam and another big spike up and another big choppy. I generally expect something like that to keep happening. The latest one is you have some froth around like altcoin treasury companies, which I don't think is a particularly healthy development. And even Bitcoin treasury companies, if there's too many of them too quickly and some of them are not managed well, they are potential. They're potential sources of liquidation as soon as you have any sort of severe stress or prolonged mild stress in the market, where the market kind of closes on them and they don't really have the cash flows to support their debt obligations, so they end up having to liquidate. I do think we'll get some liquidations. Last cycle was over 75% correction. I don't know if we'll get that again. Depends on how extreme some of this gets, but I don't think it's fundamentally concerning any more than prior cycles. So far, I would say less than other cycles.
Yeah, I agree.
But I do think we're going to keep going through, mild euphoria, washout, mild euphoria, washout. You can either wash out in terms of price or time. You can just go choppy sideways for half a year, full year, get all the interest out, get the, compress all the MNAVs and
time-based capitulation. My favorite thing to watch when people lose their mind at the same price as it was 6 months ago. You loved it 6 months ago, you hate it now. It's literally the same price.
Yeah, I continue to be bullish long term, and then even in this cycle, I don't think this cycle is over yet. I've liked the fact that we get these kind of mini cycles of slightly euphoric and then 7 months of sideways chop and another like spike up. And I expect that to continue at least for, we'll see what happens the rest of this year. But I still think we'll see higher prices before we hit some sort of longer correction. So I think that as mining rewards are now a small percentage of supply, that the 4-year cycle is much less relevant than it was for maybe the first 3 cycles. I think global liquidity is a really big metric to monitor for the overall cycle, as well as levels of euphoria. So I'm thinking less in terms of time and more like that there's a certain set of flags I look for. And the things that give me pause for like, say, a 6-month or 12-month period is signs of euphoria. And my favorite metric for Bitcoin is on-chain, it's market capitalization compared to on-chain average cost basis. Basically, the value of all coins last time they moved, which is often to and from exchanges. And that metric might become less relevant over time as more volume happens in other environments. So far, it's not really the case. So right now, that's not a very euphoric marker. If that becomes rather euphoric, I would become concerned because that's more indicative of a big pause. Then I do look at things like, what are the premiums on Bitcoin treasury companies? How many altcoin companies are coming to market? Just signs of froth. Because the more signs of froth you get, the more it is like, yeah, we're probably going to have like 6 months of correcting in time or price to wash some of this out and kind of reset. There are signs that you get 3 month or 6 month corrections at times. Nothing's really kind of warning me about a multi-year correction at the current time, which is why I think this cycle still has legs. And where I would become more concerned maybe on a multi-year basis would be more extreme signs of euphoria, leverage, dislocation from cost basis, and that sort of thing.
Alden makes several important observations on how capital acts in bull markets. In the beginning, funds move into Bitcoin first. Investors start diversifying into meme tokens, cryptocurrencies, NFTs, and other speculative ventures as the frenzy grows. Eventually, though, the hype-driven wave implodes as that capital is overextended. While most of the rest of the market depreciates, money usually returns to high-quality assets like Bitcoin when the dust settles. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Yeah, I view them more as speculations because the problem is that a lot of these, they offer a service basically. The services compete on price. Like stablecoins want to go to whatever is cheap and scalable, for example. There's not a lot of huge differentiation there. The winners from one cycle are rarely the same winners of the next cycle. They all tend to have a long-term rollover relative to Bitcoin after one or two cycles of kind of their initial action. So I think there's some degree of inevitability that people are going to look at the top 10 assets and say, well, why shouldn't I try to lever this up, or why shouldn't I try to make this available to capital markets? And there's a pop there, there's a speculation there, or they can say, look, we're going to get the staking yield on top of the asset, and you don't have to worry about that, and we'll just do it, and we'll attach a little bit of leverage to it. And I can see why there's a market for that. The problem is that the way that these bull markets tend to end is that capital just gets fractured everywhere. So it goes into Bitcoin, then you think, well, Bitcoin rose, let me buy altcoin number 82, and so it gets split 100 different ways. And then last cycle was like NFTs, and you have as long as NFTs are a thing, people are going to keep issuing meme coins. And now it's kind of like, okay, let's have more and more treasury companies come to market in all these other assets. And eventually just that you exhaust demand, you fracture the narrative. And then we talked about washouts before, either in terms of price or time, where you have 6 months or 12 months, or depending on how euphoric and then severe it is, you just have a period of time where anything that's not actually of long-term value starts to drain back into Bitcoin. And even Bitcoin can temporarily drain from euphoria back and basically into the dollar until that long tail of weaker assets is largely washed out, and then that can set the stage for the next up cycle. And hopefully it doesn't have to be one of those multi-year bear things. Because hopefully you get less euphoric in the first place and then less crazy in the downside. It could still happen, but basically I think either way you still go through some degree of cyclicality that washes out anything that's not worth being here for 10 years. Average, I view it more as a next cycle thing, most likely, at least for numbers that really matter. So for example, when we saw when MicroStrategy started the Bitcoin treasury strategy, they immediately started marketing the idea to other corporations. They would hold a conference Bitcoin for treasuries. And really no one followed them anytime soon.
I think that was because of GAAP accounting rules, or at least that's how I cope.
Well, there were accounting issues, and also just not many people were in the position of Michael Saylor, where he had such a strong ownership level of the company. He was able to think in terms of years and decades rather than quarters and maybe a couple years. So instead of being like a career executive, like someone who could get easily fired or just trying to optimize their near-term pay package, he was an owner and able to kind of make these long-range moves. That's pretty rare. But we started to see this cycle finally after a cycle delay, better accounting rules, and like a lot of Bitcoiners saying, well, if existing companies are not going to do it, we'll basically start new companies and do it. So it took more time than many people thought, but it kind of followed. And I think the same thing happens with sovereigns. Obviously El Salvador was an early mover. The Kingdom of Bhutan was an early mover. You see like UAE at the sovereign level makes some mining investments and ETF investments and things like that. There's a handful of entities out there. Generally speaking, the smaller ones can kind of execute faster on average. I think we'll continue to see talking about it more so than someone kind of just jumping in and wanting to buy half a million coins from some big country and kind of doing the full MicroStrategy playbook. But I do think that over time, this will continue to leak into sovereigns. They'll own it indirectly. Like you'll see a sovereign wealth fund own MicroStrategy, for example, or own an ETF, or potentially buy some Bitcoin around the margins. And it just kind of keeps trickling in from there as it becomes a bigger, more liquid, more understood network. I think that one of the bigger things this cycle is increasingly understood at the sovereign level that at least it's here to stay, with the SEC kind of losing their court case and having to let the spot ETFs come to market. And then this kind of pro-Bitcoin, pro-crypto administration, which is that even I think the market's kind of reached the point of scale and acceptance where even if say there's, elections down the line, we have a less favorable administration, it's hard to roll back all of it. Even if you take, 3 steps forward, 1 step back, it's still 2 steps forward. And especially when you're looking at a global scale, where one country could pull back, another country can say, well, then come to us. We'll bring your businesses and your capital and here. So I think this cycle is kind of marked more by it's here to stay at the institutional scale and allowed by most at least semi-free countries. And over time, as more cycles play out and as the asset hopefully stays big and liquid, you'll get more sovereigns that actually maybe want to buy it and hold it at scale.
Lyn Alden ends by making a compelling argument about how adoption occurs in waves. She notes that when MicroStrategy began purchasing Bitcoin, many people thought other businesses would follow suit right away, but they didn't. Strict accounting regulations or executives' short-term thinking, which prioritizes quarterly results above long-term strategy, prevented the majority of businesses from doing so. Because he controlled a large portion of his business and was able to make audacious 10-year wagers, Michael Saylor was special. But things started to change over time. As Bitcoin gained popularity and liquidity, better accounting standards developed, and finally, new businesses were founded with Bitcoin at their heart. Additionally, she emphasizes how Bitcoin is becoming inextricably linked to the global financial system. The asset has attained a level of magnitude and popularity that will endure even if political winds change, thanks to the approval of spot ETFs in the United States and a generally more pro-Bitcoin regulatory environment. Globally, other nations will intervene to draw in that capital and innovation if one tries to drive Bitcoin away. Lyn concludes by outlining the reasons why businesses such as MicroStrategy frequently command higher prices. They make it possible for large capital pools that would not otherwise be able to purchase Bitcoin directly because of stringent regulations by developing financial instruments like convertible debt or preferred shares. For the sole purpose of gaining exposure through these channels, investors might be prepared to pay a slight premium. Alden says the trend is obvious. Bitcoin is here to stay and is becoming more and more integrated into sovereign reserves and corporate balance sheets with each cycle. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.